Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek, insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
We are watching shares of Apple and Microsoft. In fact, those two companies, are our two top stories among our most read on the Bloomberg today. Let's get to Microsoft first. Stock trending lower. TD Cowen saying this Mag 7 tech giant canceling some leases for U.S. data center capacity, raising some broader concerns, Tim, over whether it's securing more AI computing capacity than it needs in the long term. That debate out there.
Also today, Salesforce signing a multi-billion-dollar cloud deal with Alphabet's Google. It's part of a larger effort to combine forces and attract corporate customers who currently use Microsoft productivity and AI products. Carolyn and Apple coming out and saying they're adding 20,000 jobs amid this tariff threat from President Trump.
Yeah, both Microsoft down about 1%, Apple actually up just a hair. Oh, actually, forgive me. That's what happens when you put in the wrong ticker. You get a different quote. Apple is up about 1% at this hour, so we just want to get it right. Hey, let's get into both of them. With us right now is Bloomberg Intelligence Senior Technology Analyst. He is Anurag Rana. He joins us from Chicago. Anurag, good to have you here. Maybe set the record straight. Let's go to Microsoft first. What's your best guess on some of the worry that we've seen play out in Microsoft's trade? While the stock's down, it's off its lows of the session. Is it about possibly canceling some leases for U.S. data center capacity? Do we even know that that's true, or is it the Salesforce deal? How do you see it?
Yeah, so I think the biggest thing to think about is over the last, I would say 12 to 18 months, we have heard that there is some issues with OpenAI relationship in terms of training of their large language models. And what we saw beginning of this year is OpenAI is going to work closely with Oracle and SoftBank to do some of those training. Now, Microsoft has been talking about a lot of their AI revenue coming from inferencing, which is when you're using a product, when you're using an application or like ChatGPT, and not so much of the training side of it. So I think there is a reallocation of resources over here. I don't see them holding back. I actually just listened to the CEO speak at a podcast 3 days ago, and he was talking about leasing more capacity in 27 and 28. So I think they have given a number for this year, which is $80 billion in CapEx. I think that remains intact. I don't see that going down.
So how should investors look at this TD Cowen note?
So I think the best part to think about it is Microsoft. I mean, if I was a Microsoft holder, maybe I would like this thing because they are not spending so much, but their revenue is coming in. They have a 5-year agreement with OpenAI that's going to end in 2030. So every time somebody uses ChatGPT, the money goes straight to Microsoft's pocket. So I'm fine with it. I don't have a problem with this. But as you said, it is ruffling a lot of feathers out there.
Yeah, and we should point out at its lows, Microsoft was down about 2.2%, now just down about 1% at this point. All right, so you're just telling investors for the most part at this point in Microsoft, I know you don't tell them what to do, but you're just saying, guys, move on, basically.
Exactly.
All right. What about Apple? Let's talk a little bit about that one, because that is also top of mind, adding some 20,000 jobs. President Trump has kind of put it out there, amid maybe some concerns that Apple was going to get hurt by possible tariffs. I'm not quite sure how to read it. But, we had Mark Gurman on Friday kind of laying out what is the Apple global supply chain. You understand it well. What Apple's doing here in the United States, is this new news? Is this something that would have happened if a Democrat was in the White House again? Is it something they've had in the works? Like, what's your read on it?
No, I think there is some pressure from the administration for big companies to show local investment. So I think there is some part of that's true there. Now, the question is, where is the money going to go? The way we look at it, they talked specifically in their release about AI servers. Currently, Apple uses their AI technology. I mean, when it comes to the model, they are leasing it, or they have a partnership with OpenAI. It's possible they could spend a lot of money to make sure that they have one of their own models into whatever they do, not just on the phone side, but all the products and services. Second is AI servers, which is these guys have been renting a lot of the cloud capacity from hyperscale cloud providers out there. Now, it seems like they want to do some of those computing themselves, and that's just to make sure their AI runs better with their infrastructure. So I think there is some element of high-end work here. I think there is some discussion around semiconductor manufacturing technology or designing. So that's going to be there. So I think of all of these amongst in the high-end jobs, not so much in the the normal supply chain of putting phones together.
But the real question everybody has, Anurag, is will Apple have to pay tariffs, or will they be exempt from tariffs as a result of this investment?
I think we'll find out in a week. It sounds a lot like that the president may have asked them to do something, and these guys are following. And let's see how that shows up. But frankly speaking, more than the tariffs, I'm more concerned about the regulatory pressure on their services business, which is the App Store and the money they generate from Google. And the Google case is already, we know that's pending out there. So if they can get a relief on that, frankly, financially, that's a bigger deal for Apple.
Why are you more concerned there, though? Are you this is a case that started under the previous administration. What happens in the new administration there?
So you remember the Google case where there is a discussion around their search capabilities in their Android operating system. Google pays Apple a lot of money to make sure search is default in a lot of things in iOS, and I think that's a big question right now. They have never disclosed that, but the rumor is that's about $20 billion of basically very high margin revenue that falls straight to the bottom line. So think about it, how much that can impact if a judge basically tells Google that they can't pay Apple anymore. So that's one. Second, the App Store fee, which is already the 30% that they charge people. There is a case on that as well with Epic Games, and that's coming up again in the next I would say few weeks for a discussion where that fee, Apple has reduced it slightly, but it's still around the 27% mark. So those are the two things I think financially that can have a bigger impact on Apple in the long run.
All right. So in other words, get ready for a really cool cage match between Tim Cook and Sundar Pichai. Is that what we should expect?
No, I think what could happen is the government, the administration can basically say, listen, we don't want to, basically scrutinize our large tech company as is. They are being hammered by Europe and all the other things. So they could get a little bit more, you could say favorable tone from the current administration if these guys, go out and. So again, I'm not saying the legal system can be swayed one way or the other, but the sentiment changes once, these tech companies have been under a lot of fire for the past 4 or 5 years.
No, absolutely. No doubt about it. I'm having a little bit of fun with you, but I do get it. Like, you can just imagine the conversations that are going in and around, certainly the Oval Office on all of this. Hey, Anurag, thank you so much. Bloomberg Intelligence Senior Technology Analyst out there in Chicago, Anurag Rana.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Coming up in the new issue of Bloomberg Businessweek, a profile on the individual who's been working in autonomous vehicles since the industry's beginning some 2 decades ago. In the late 2000s, he created a prototype autonomous car that he sold to Google, effectively seeding the company's driverless car division. You might know it as a company, kind of familiar. I think it's called Waymo.
Yeah, it's getting increasingly more and more attention, too. But let's talk Pronto here, because with more on Pronto's CEO, Anthony Levandowski, we turn to Max Chafkin. He's Bloomberg Businessweek columnist and the co-host of the Elon Inc. podcast. He's also the author of The Contrarian, Peter Thiel and Silicon Valley's Pursuit of Power. Max joins us here in the Bloomberg Businessweek studio. The name, Anthony Levandowski, a familiar one to some tech watchers. Remind everybody who he is.
Yeah, Anthony Levandowski is really the person, probably the single person most responsible for creating driverless cars as like an industry. He was involved in the original DARPA Grand Challenge, which was this thing in the early 2000s where the military had a bunch of technologists try to make self-driving cars. He built a prototype self-driving Prius that was sold to Google and played a really important role at Google for years, and then left to join Uber's self-driving car effort, played an important role there, and then got into this intellectual property dispute with Google that led to him pleading guilty to stealing trade secrets. He was actually sentenced to a prison term, but was pardoned by Donald Trump. And he kind of emerged from this experience as a critic of the driverless car industry. Basically, Anthony Levandowski's position is that these robo-taxi services, so Waymo, Tesla is trying to come up with one, as we just heard, and also GM Cruise, which just folded theirs, that these businesses are basically much further away than most people realize. In fact, further away than the companies themselves are willing to admit. He's been talking about this for years, and he is offering kind of a different approach, which is bringing these technologies to essentially industrial sites where they are still essentially driverless cars. They're just driverless dump trucks, but they're not on city streets. They're on private land, and they're monitored more aggressively because they're essentially heavy-duty construction equipment. So instead of having to worry about cyclists and potentially causing traffic jams and the interaction between customers and so on, all these problems have really bedeviled the robotaxi industry and continue to bedevil the robotaxi industry. And one of the reasons these companies haven't been able to turn profit, they basically take all that out of the equation, and we're just talking about a dump truck moving some very heavy rocks from like one corner of a rock quarry to another. Obviously, this is a smaller business in the near term than something like robotaxis, but I think this company Pronto is showing that it's a real business. And the news that we reported on today is they signed a deal to supply driverless dump truck technology to a dozen sites, a dozen quarries around the world through a German company called Heidelberg Materials. Basically, we're talking about 100 or so trucks, which doesn't sound like that much, but having seen these trucks in person, they are very, very large. So these are
super
big
inexpensive,
items.
Right?
Yeah, exactly, and that's one of the reasons why
inexpensive. I was being sarcastic.
Yeah, no, I know. They are very expensive. These are expensive items, and one of the reasons this is an appealing area for this technology is because of the expense. Like, then adding the sensors isn't such a big cost. So we don't know exactly how much the sensor kit in a Waymo costs, but it very likely costs more than the cost of the car itself. People have estimated in the hundreds of thousands of dollars. So you're talking about really expensive technology, and then a lot of expensive technology to support that. So whereas in the dump truck, it's the sensor kit is a smaller percentage of the total.
But Komatsu and Caterpillar, as you point out in the piece, already have this tech. I don't want to say this technology, but they already have their own driverless technology.
I'd say this is an area where,
and for a while.
Yeah, they have been really successful, and this is the point that Levandowski makes a lot. That as much as we've seen a lot of headlines about driverless robotaxis, when you really get down to it, we're not talking about that many cars. I haven't looked at the Waymo numbers lately, but my guess is in the hundreds, maybe around 1,000. I mean, that's kind of like similar, and we're talking about like little trips. Those are kind of similar numbers to what Komatsu and Caterpillar have deployed in terms of these gigantic dump trucks. And I think the revenue on the kind of industrial side for now is probably a lot greater. I mean, obviously the hope with Waymo and Tesla is that you're going to make it up on volume. You're going to find ways to do this more inexpensively. Once it's deployed in a mass scale, then it's going to change everything. The economics are going to get a lot better. But we haven't seen any of that yet.
Remote controlled versus driverless. Like, what's the kind of nuances here?
So these are autonomous in the sense that like the computers are making the decisions. Very, very similar to what's happening in a Waymo or something like that. With Waymos and with some of these other robotaxi solutions, you do have some remote support. Now, some people would call that teleoperation. The companies, there's a lot of back and forth about how much remote support are they actually doing. Part of the discussions that happened in the wake of Cruise's collapse was there were reports showing that these people in call centers were intervening very, very often. So you're talking about a huge amount of support. Now, on an industrial site, you also have some support, right? There is somebody monitoring the overall site, and the tasks that are being done are incredibly repetitive. So basically, and I've been to some of these sites, it sounds kind of cool, but then when you experience it, it's very repetitive. The truck like starts at a rock crusher, it drives to a mining pit, picks up some very large rocks, and does the same route back and forth. And the whole point is, again, the same route back and forth. There's no risk of a police car coming in. There's no risk of a little dog running out. There are pedestrians, there are people, but all those people are wearing, bright orange vests, and those people have a lot of experience dealing with heavy machinery, whereas when you're talking about on a city street, none of that's true. You have a ton of people. It's very unpredictable, and those people, as we've seen from some of these incidents in San Francisco, are not necessarily, their interest is not necessarily to allow the robo-taxis to operate efficiently.
You're not going to be hailing a huge dump truck or rock crusher on the side of the road to drive you somewhere.
Hopefully not.
Hopefully not. Hey, Cece Cherendorf, who's our producer, she just sent me an IB with a really good question. These jobs that typically are the ones that you're talking about that these replace, those are pretty high-paying jobs, require a lot of training. In some cases, they can be unionized. Are those impediments to scaling this?
Well, and part of the appeal here, frankly, is that the operators who operate these dump trucks are a lot harder to find than Uber drivers. And one of the reasons why Cruise and Waymo have lost so much money on these robotaxi businesses is that you put a Uber driver in a Corolla, and that is a very low-cost solution, whereas the kind of people who operate this heavy machinery, these are much higher paying jobs. They require a lot of experience. The response from Anthony Levandowski, you talk to other people in the industry, is basically, number one, look, these industries have a labor problem. It's not like there's a surplus of construction workers. Actually, they're struggling to find people who can operate these dump trucks, and that at these sites, it's not like they're losing staff. What they're doing is taking somebody who would have been driving a dump truck and putting them, operating an excavator or something, a sort of higher difficulty job. Even in these loops that are automated, right, there's a lot of automation. The crusher, of course, is doing its thing without, people aren't literally crushing the rocks. The dump truck is being driven, in some cases by a computer, but the person who's deciding what to put in the back of the dump truck, that's a person operating an excavator. So what they're saying is yes, this frees up humans to work on tasks that are more difficult, but maybe also less unpleasant, not just this repetitive back and forth. I think in the long run, of course, as these technology, the idea here is to replace human labor for sure. There's a question of, if you replace one specific job, what does that do? Does that mean fewer people on the job site, or just way more productivity? And I think that the truth is we don't know the answer to that question yet.
Is this it, or does he see something else down the road?
Yeah, he says we're gonna everything with four wheels is gonna be automated. It's just a question of when. His basic thinking, and honestly, I think this makes a lot of sense when you followed the industry, that there's gonna be a lot of sort of interim automation going on, where either something that's not a robotaxi, but you're adapting some of the tools that could be used for a robotaxi, say in a more narrow situation, like on an industrial site with a specific kind of equipment, or even in a very narrowly defined geographic range or something like that. But that we are a long way from the just set your robotaxi out on the street. And it's kind of interesting to say that because, of course, you have a couple of big companies that are betting very heavily on this idea of just sending robotaxis right on the street.
Yeah, one of those companies, Tesla, of course, headed by none other than Elon Musk, who is spending a lot of time in the Capitol right now, Max. Your story ends in a really notable way. It discusses this idea that, wait a second, is the idea of regulation what's holding this technology back, or is the technology holding us back? He argues it's the tech. It's just not there yet.
Yeah, and Musk has said on these earnings calls that, he's going to try to figure out a way to get the Trump administration to ease the regulatory burden. He's implied in all sorts of ways that all Tesla needs is the regulatory okay, that the tech is there. And Levandowski says, listen, if we're talking about regulations, that's a distraction. The truth is, and I've heard this talking to other people in the AV industry, if they wanted to deploy these things more widely, they could. And the reasons that they are not doing it is partly because of the tech and partly because of the cost. Now, we'll see. Elon Musk has tried very bold things in the past. He says he's going to launch a robotaxi service in Austin this summer. See how quickly that goes.
He's been saying that for years, too.
He has. Every year since pretty much 2016.
Yeah.
But he has said that this will be the time.
Hey, listen, before we go, because Peter Thiel and Palantir, and we're going to do a big discussion in just a moment, but I mean, there are some concerns about his exposure to Pentagon cuts. How do you see it, the relationship between he and Trump that we've seen in the past? Do you think he needs to be worried?
Well,
or his company needs to be worried?
I think that Palantir stock, I'm not an equities analyst, but if you look at what equities analysts are saying, I mean, it's very highly valued relative to its actual business. So I mean, I'm not sure that, I mean, obviously, if you're a defense contractor and there are potential defense cuts, that is a potential warning sign. It's also a potential reminder to investors that, hey, it's possible that we've gotten over our skis. I do think Palantir, obviously Peter Thiel is an important voice at Palantir. He's the single largest individual shareholder, but they do have other folks involved with that company who are connected to the Trump administration. I do think people who own the stock and are close to the company are still optimistic that they are going to benefit from this period. But yeah, you do see some warning signs.
All right. Well, you set us up well for our next discussion. Hey, Max, thank you so much. Max Chafkin, columnist of Bloomberg Businessweek, joining us here. He's also co-host of the Elon Inc. podcast and author of The Contrarian.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Some other headlines. President Trump, as Carol mentioned, saying that the purpose of the meeting today was to end the Russia-Ukraine war. Trump also saying the U.S. deserves to recoup the money that we've spent or that we've sent to Ukraine. For more on this, we're joined once again by Monika Bickauskaite-Aleliune. She's public policy director at the strategic political consultancy Key Elements Group. She joins us once again from London. Monika, separately, we should note Ukraine is in the final stages of talks with the U.S. over this deal to give Washington a cut of the country's natural resources. We got this from Ukraine's deputy prime minister. You argue that Ukraine must make the U.S. a strong partner. Is natural resources the way to do this?
I think that for Ukraine, what's very important is to become a strategic place and location that U.S. would have vested interest in. And to do that, you have to have economic relations and economic importance. And I think that based on what President Trump is saying, he would be happy with this deal. And I think that if you have American business deeply rooted in Ukraine, even if you don't have a written guarantee to say that the U.S. would help Ukraine in case of Russian attack, continued attacks in the future, I think if American business is there, it is in the U.S. interest then to defend Ukraine, because American interest would be directly affected by this. So I think as much of economic interest you can have in Ukraine for the U.S. and for Trump administration, the better the relationship can be in the future when we need security guarantees from the U.S. in Ukraine.
What are the optics of all of this, the different meetings? We mentioned the meeting with Stephen Witkoff and nobody else maybe necessarily being in the room. There's just so much going on. How do you read the optics of what this means in terms of an actual end to the war between Russia and Ukraine, and what it means for Ukraine going forward, what it means for Russia and its place in kind of the global world order? Both of them, really.
Yeah, so I think that talking to people in Ukraine who are close to the situation, we don't think that the deal is imminent. I think that it is in the air and conditions are being discussed. However, I don't think that without talking to Zelensky and having more discussions with Ukraine, a deal can be implemented. At the same time, it is quite shocking to see how Russia came back to the diplomatic table, to the world table, and is being able to talk directly to the President of the United States. I think that is definitely concerning, and domestically for Putin that will be empowering and will be seen as strength and potential victory for many years. And that is definitely on Russia's side, not on Ukrainian side at the moment.
Monika, what do you see as Zelensky's future in the country? Do you think he'll flee the country?
Yeah. I don't think he will flee the country. I think he had a chance, he was offered a helicopter at the beginning of the war, and he said, no, I would like to stay and continue fighting. So I don't think that he's a quitter who would leave the country. But I think that looking from historical perspective, we saw that leaders who led the countries during the wars weren't really popular after the war, simply because that, people have short-lived memory and they remember kind of the end of the war, how it ended, seeing the devastation, the economic struggle. I think that people will think about that. So it will be quite hard hard for Zelensky to be re-elected. And we do think that, talking again to the sources in Ukraine, I think that election is upcoming and it will be the most difficult one for Zelensky so far.
Yeah, it's been difficult, no doubt about it. We talked with our Mark Champion, who covers Europe, Russia, and the Middle East. He's a Bloomberg opinion columnist, and this was last week. And he said maybe the way to really think about this is that it's not necessarily the U.S. trying to negotiate an end to this war, but rather negotiating a reset with Russia, with Ukraine being a valuable card to trade in that process. Do you see it at all that way?
So I personally don't think that U.S. would, become great again by empowering Russia. I don't see a reason for U.S. to reset with Russia or empower Russia, because even if we look economically, Russia is not a market where U.S. companies that care about their future and investment would like to be back, because Russia is a very difficult market. It's not a free and fair market. It's controlled by oligarchs and people close to Putin. So there's no economic benefit from that. There's no political benefit from empowering Russia and making it a superpower. So I think that such idea would not work in reality. There's no need to do that, and you won't make America great again by making Russia great again.
How would you characterize the difference between the U.S. approach right now under Donald Trump and the way the European bloc, the European Union, is approaching the situation?
So I think, for Europeans, this directly affects their own security, because obviously Ukraine is in Europe, and if Russia perceives victory in Ukraine, they could go further. Whereas for the US, I think they're quite offended by the fact that European financial support was given to Ukraine as loans, whereas the American support was given as aid without asking to pay back in the future. And now President Trump is thinking that this perhaps wasn't fair, especially that Ukrainians don't seem to acknowledge that enough. So I think he has quite a different perspective. He says that he likes to make deals, and he sees that a deal for US right now is not the best deal, whereas Europeans perhaps are getting more acknowledgement and, as he would put it, a better deal with Ukraine. So I think it's just different perspectives, but one side is also affected more. But at the same time, the US would like to see Europe contributing more to their own capabilities, their support for Ukraine and their defense, because US cannot keep carrying the burden without Europe also stepping up to the plate and making sure that they're capable of doing it themselves as well.
So, Monika, I try to ask everybody who comes on our program to talk about this war. It's the third anniversary of it. It's now going into its fourth year. I remember 3 years ago, we were sitting here and there were many analysts on our air talking about how this would be over in a matter of days just because of Russia's sheer size versus Ukraine's. How, in your view, does this war end and when?
So I think we're nearing the end of the war. However, we have to acknowledge that Ukrainians did a tremendous job, both in their military. As you said, Russia is bigger in size. It's a better funded military because, of course, they're spending so much more of their budget for defense. So Ukrainians did an amazing job in defending themselves. However, at the moment, they are able perhaps to make sure that Russia doesn't advance, but there's no substantial victories in the battlefield. And without continuous support from the US, from a united front from Europe and UK, I don't think that Ukraine, unfortunately, can continue without this united support that it has had throughout the 3 years. And I think at the beginning of the war, President Zelensky did an enormous job of, rallying the world around Ukraine and making sure that Ukraine is supported. However, right now we see a bit of different situation, whereas the US administration is no longer willing to go for many more years in the support, and they would like to see the end to this war and stopping of killing of Ukrainian people in Ukraine.
Hey, Monika, so if you did say you didn't think any deal is imminent, but what would be the most logical timetable in your view for this war coming to an end finally?
I think it's coming soon. However, for it to come, again, there needs to be conversations that include Ukraine and Europe as well, because without Ukraine, of course, any deal cannot be made. And we need to have a reasonable deal, whereas Ukraine doesn't come out of this war without having anything that it was fighting for. We need to talk about potential EU membership. We need to talk about security guarantees. And I think this unfortunately takes time. We cannot just do it in 24 hours, as President Trump originally imagined. I think it will take a bit longer. However, I think this year, as President Zelensky also said, he would envision we'll see the end. And I think early this year rather than late this year, we'll see the end of the war.
Hey, Monika, we'd be remiss if we didn't ask you about the election in Germany over the weekend. To remind everyone, the conservative leader, Friedrich Merz, emerged as the winner in the election. The results, though, gave his bloc just one clear path to power with intense pressure to move quickly to form a government. I think a big part of the story is the far-right AfD, Alternative for Germany, doubling support to become the second strongest party. They had 20.8% in the election. What were your takeaways after the votes were tallied?
So I think that in Germany we'll see a more decisive government. I think that Merz as chancellor will be taking stronger action than perhaps the previous government did take. He is pushing for Europeans to, build up their defense, same as President Macron. So I think there is also an angle for potential German and French cooperation in near future, especially now that the US has been saying that Europe has to take a stronger role. I think this is very likely to happen, given what Merz has been signaling. Of course, this was him talking in election cycle. We need to see what he will say after now that he has been elected, when he builds the coalition. And regarding the right-wing party, yes, we do see that in Europe and in the US as well, there is a rise of lenience towards these types of parties. And this has been caused by different aspects regarding, for example, security as well, immigration. And we have seen increased support for parties like these in Europe. And I think it is likely to continue to increase in the future.
All right, going to leave it there. Monika, thank you so much. Really appreciate it. Monika Bickauskaite-Aleliune, she is Public Policy Director at Key Elements Group, joining us from London.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
9 minutes to go until the close of trading. We just got the numbers from Charlie Pellet, down 0.3% on the S&P, down 0.9 on the NASDAQ composite. Carol, after years of outperformance, the S&P 500 is trailing its international peers this year. Investors are put off by uncertainty from President Trump's policies on tariffs and immigration, as well as lofty valuations.
Yep, we've talked about it a lot. We'll see whether that outperformance continues. Let's get to it. Our drive to the close guest is Eric Metz. He's Chief Investment Officer of SpiderRock Advisors, joining us here in our Bloomberg Interactive Broker Studio. Good to have you here. What do you make of the market environment, and especially when we've talked about American exceptionalism, and yet you look outside the United States and there are some markets definitely outperforming the U.S.?
Completely. I think it's a little bit of a tale of a different story this year versus the last 2 years. I think uncertainty is beyond prevalent and observable. And I think investors' psychology is a little bit tepid, right? So you've had two massive equity performance here domestically. You guys just mentioned the international outperformance. Yes, there's some policy. Yes, there's some currency effects. But largely speaking, the U.S. markets have been so good to so many people for so recently long that a pause is probably also healthy.
What do you think of valuations right now? I think it was Mike Wilson from Morgan Stanley who was on Bloomberg Intelligence or Surveillance this morning. And Paul and Tom asked him about how expensive the U.S. market had become and if clients are asking him. And he said, that ship sailed. They're not even asking anymore because things are so expensive right now.
Our work is solely focused on advising folks on the risks they see and sometimes the risks they may not be seeing. And valuation is often a concern of clients, investors, portfolio construction alike. But my rebuttal is valuation is not a catalyst. And so if you're trying to think about building portfolios, the timing, the macro levels, market timing, et cetera, are very, very challenging. Expensive can get more expensive, valuations can get further extended. I think objectively speaking, on almost every metric, they're on near historic all-time highs. So for that argument alone, yes, they're expensive. But I think the thing to consider is it can get more expensive if that's where investor sentiment takes us.
Yeah, absolutely, right? If you get some momentum going, right, and chasing. Having said that, the trade in terms of overseas and the outperformance we're seeing, is it a fundamental trade? Is it a valuation trade?
Well, listen, I think, without...
And we're lopping a lot together, and I'm looking at some of the developed markets.
Yeah.
But you know what I'm saying? Is it fundamentally based, or is it just a case they've been beaten down so much that why wouldn't you, on a valuation basis?
Our clients and our work for clients definitely has, I'll call it a diversification might finally pay off in equity holdings, right? So a little bit of a mean reversion. But I think the thing to think about here is there is a lot of policy affecting currency, affecting international trade, which could come into kind of an import-export. But again, at the end of the day, like all of this from where we sit is just providing investor uncertainty. And so that puts a little bit of pause in kind of portfolio construction and some of their aggressiveness.
What's the biggest obstacle as you look ahead this year? I mean, I mentioned the uncertainty around policies on tariffs and immigration. Is that the biggest uncertainty you see?
You know, I think from where we are operating predominantly with our taxable client base, the notion of how to lock in gains, the notion of how to rebalance portfolios with tax as a friction point has been a massive discussion point. And so, yes, there's this turning of the tide, domestic versus international. Yes, there's a growth versus value argument. Yes, there's valuations in scope always. But I think the repositioning Mag 7, but also just broad-based domestic equities is so cost prohibitive from a tax perspective that uncertainty is where our core work is founded a value proposition in a lot of these clients.
So what are you doing then?
Re-risking and de-risking using option overlays. I mean, that's the core thesis of how to solve that. It's the instrument that can solve that without selling the underlying instruments. And so whether it be Apple or NVIDIA or Google or Microsoft, those are the obvious outperformance. It's NASDAQ, it's growth. It's largely domestic versus international. So thinking about how to, I'll call it rebalance portfolios just more tax efficiently is a core thesis for us.
Which is what you guys do if you go to your website. I mean, that's how you mitigate risk.
Yep.
Whatever it may be.
Whatever it may be. Currencies, concentrated stock, factors, all of the above.
How do you mitigate risk without giving up returns?
Yeah, I mean, I think there's two lines of thinking here. One is...
Because you're paid to take risk.
People are paid to take risk. That is the definition of equity risk premium. Go back to valuations now where interest rates are. Interest rates are tugging at that equity risk premium, broadly speaking. And so when that rebalance wants to occur, whether it be equities to fixed income, whether it be putting cash to work, whether it be growth to value, thinking a little bit more creatively than conventional measures of just sell X to buy Y. Let's incorporate a derivatives overlay to do that more tax efficiently. Because there is no balance sheet funding. Like by definition, we sit on top of portfolios.
Eric, just got about 45 seconds left here. Are you finding in this environment that there's more risk mitigation than you have to do maybe in other market cycles? I'm just trying to get a gauge of the nervousness within the market.
The demand curve, I think probably more so than ever, of which some we discussed as to why, right? You have competing forces, interest rates, fixed income providing real healthy returns.
Right.
At the expense of equity valuations, equity risk premium, right? That's one. I think the biggest thing is what everybody is aware of, but just we don't talk about it enough, is the demographic shift in taking the retirement asset base and downshifting risk. You can downshift risk by taking your 80-20 to a 60-40, but that's got a tax impediment. And so that work right there is where we really spend our time educating and advocating for our clients.
All right, makes sense, makes a lot of sense. Eric, thank you so much.
Thank you, guys.
Eric Metz, Chief Investment Officer of SpiderRock Advisors, joining us right here in our Bloomberg Interactive Broker studio.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.